Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies, and we're going to be analyzing three articles, to where the first one is titled, SoFi Layoffs, Reports Indicate that FinTech is Cutting Staff. Next, we're going to be analyzing an article titled, Why Wall Street May Soon Turn Back to Bullish on SoFi Stock. Investors bullish on fintech disruption of traditional banking may want to take advantage of the latest round of weakness with SoFi stock. And then lastly, we're going to round out the video talking about how a new financial institution has initiated coverage on SoFi Technologies, and they have given them a pretty good price target in my regards. So with that being said, don't forget to go and annihilate that like button for more videos on SoFi Technologies. Subscribe if you are new, comment your thoughts down below about any or all of these stories, and don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. With all of that being said, let's get right into today's stories. SoFi Technologies, as you already know, is a fintech company or a financial technology company that essentially operates as a digital bank. And they have one of the top fintech platforms on the market right now, especially since they hold a bank charter. But despite all of this good news and how they performed very well over 2023, apparently they are letting people go. They are firing people. They are laying people off. However you want to say it, this is not good for the overall company. So let's dig in why this may be. First, I want to make a note that as of right now, we haven't heard anything officially from the company themselves. This is just hearsay. But even with that being said, we have seen a multitude of times where hearsay ends up turning out to be true. And despite SoFi being a huge winner and one of the best stocks to invest in 2023, which we have been reporting on this channel for over the last year, so we predicted this amazing gain of 116% in their overall share price, apparently the company is slashing their headcount, which is not going to reflect positively on their very exuberant and high share price right now. So let's talk about the first report. Well, the first report of this hearsay comes from an X account formerly known as Twitter. Essentially, the number of employees who are being laid off or fired or are looking for new jobs is around 300 employees, or approximately 7% of SoFi's workforce. Now, this isn't a huge deal because 7% isn't that much, but it does beg the question, why would SoFi Technologies be laying off employees, especially since they're about to become profitable in this very quarter? Unless the company doesn't think that they're going to become profitable, that they're going to underperform, that the share price is going to crash, and that they can't support these employees. So this is definitely more of a bearish perspective, and I'm very interested on why this is happening. An analyst even chimed in and they commented on SoFi letting people go because they predict more pain ahead for this company and more downside in their share price. They actually believe that this company will fall to around $5 or lower. And for me, if the company does fall that low, then I'm going to increase my exposure to this company if it falls down to around $4 to $5, so I can cap out at an initial investment portfolio allocation of around 5%. And I just think it's very interesting that SoFi is letting employees go potentially ahead of their fourth quarter earnings results for the fourth quarter of 2023, as well as full year results. And that's anticipated to take place on January 29th of 2024 at 8 a.m. So I am very intrigued about this, but we have to keep in mind, as of right now, we haven't heard anything solid from the company themselves. So maybe this is just someone trying to scare investors to get the SoFi share price lower. However, this would be an interesting tactic because so far it's working. But this also could go to show you that investors are trying to get ahead of the curve because maybe their upcoming earnings report won't be as bullish as originally anticipated. However, I don't think so. I am still holding out and I'm very confident that SoFi will achieve profitability in the fourth quarter, meaning that when they bring in their results, this should be a positive and act as a catalyst for their overall share price. SoFi Technologies has been extremely volatile lately in regards to their share price, especially since an analyst downgraded them because they don't assume very positive returns in 2024. However, for me, I still think there's strong potential left in this company to where they could easily achieve a $9 to $12 share price. So let's talk about the bullish positive side and the bearish negative side of SoFi Technologies as we approach their earnings report. Well, for the analyst who downgraded this company, they did so for two main reasons. The first reason is that they believed that the run-up in SoFi's share price was too aggressive after their most recent earnings report. The second reason that they believe that SoFi shares won't really perform well in 2024 is that they believe the interest rate cuts by the Federal Reserve throughout the year of 2024, and there could be 3 to 4 of these, is going to act as a headwind instead of a tailwind. And for me personally, I disagree with them on that. By cutting interest rates, this is going to allow people to flood back into financial institutions to take out personal loans and refinance loans. So I really don't see the problem with cutting interest rates. I actually think this is going to act as a catalyst for financial institutions and the stock market in general. So I adamantly disagree with that analyst. We also see that they have a huge upcoming catalyst, which will be their fourth quarter 2023 earnings results, both for the quarter as well as the entire year. And like we said earlier, that will happen on January 29th. Now, this analyst believes they are going to have a bearish negative earnings result, but I just don't see that happening. Every time I look at the hard numbers and the hard facts, I see them having profitability. Now, clearly I could be wrong, and I've been wrong in the past, but I just don't see on a numbers basis how SoFi wouldn't become profitable. We also haven't heard anything from their management saying that they are going to miss profitability, because you would think they would have mentioned that in a previous earnings report, but we only hear the opposite. We see them saying that yes, they are going to achieve GAAP profitability in the fourth quarter of 2023 and throughout the year of 2024. It would be a different story if these other bearish negative analysts actually gave information in the form of data or statistics or even financial metrics, but they're not doing that. They're just giving their opinion, which is not backed by the data, and I want to pay attention to the data itself. Clearly, investors are increasing in excitement as we approach their upcoming earnings report, and if they do disappoint on their approaching earnings report, this would be catastrophic for the share price, sending it plummeting down to between $4 to $5, just like the analyst predicted. But on the opposite side, we do have bullish analysts who believe SoFi Technologies will crush their earnings report and beat on their both top and bottom line predictions, which is exactly what we would want to see as investors. We also know that this is anticipated to incorporate student loans. Remember, in 2023, we had the student loan moratorium where people were not refinancing their student loans, but that was dropped in 2023, and we are now going to be able to see that reflect in their upcoming earnings report. And I think this is going to allow them to have a huge boost in their overall financials, likely pushing them toward profitability for that quarter. We also saw, if you recall, that SoFi Technologies surged in their share price by double digits following their most recent earnings report. How much higher are they now going to surge because they are going to be profitable in this one if it is positive? So I have the utmost faith in SoFi Technologies regarding this upcoming earnings report. But again, you should keep in mind, or at least in the back of your head, that they are laying off people potentially, and that these bearish analysts could potentially be right. But I just don't see that actually happening. And right now, those layoffs are just rumors. But even if the layoffs were true, this would just make SoFi more profitable because they no longer have that expense of paying 300 employees. We also anticipate very high organic growth in their membership throughout the year of 2024 and positive GAAP earnings throughout the entire year. That's why I personally believe that SoFi Technologies will either meet or beat their current forecasts. Now, this particular financial analyst believes that the share price could surge to $15, $20, or even $25 per share relatively soon. However, I think that is way too bullish. I think a price point between $9 to $12 is plenty, because we always need to watch out for people who are trying to overhype the stock so they can eventually short it once the company does not meet expectations. But as of right now, the author of this article says that SoFi stock earns a B rating in portfolio grader. So overall, this is still a fundamentally strong company that is rapidly growing. We also saw another prominent financial institution initiate coverage on SoFi Technologies. But before they did that, they actually cut multiple ratings on other stocks. And that would be none other than BMO Capital Markets, which downgraded 6 stocks that are quote-unquote vulnerable to increasing net charge-off rates for credit card and or prime auto loans on Wednesday. And the companies in which they cut their ratings for would include American Express, which was cut to an underweight rating from a market perform rating. They cut Capital One Financial, they cut Synchrony Financial, they cut Ally Financial, and they also cut the rating for Citigroup as well as Goldman Sachs. These were all downgraded to market perform rating from an overweight rating, to where BMO even issued a statement saying, and I quote, soft landing or not, system-wide credit quality is deteriorating, end quote. And that's the reason why they cut the rating on these financial institutions. But interestingly enough, they didn't cut SoFi's rating. They actually initiated coverage on SoFi Technologies, and they also gave SoFi Technologies a $9 price prediction over the next 12 months and throughout 2024. So honestly, I think this is relatively good news, but we're just going to have to wait and see, and I would love to hear your thoughts down below about any or all of these stories surrounding SoFi Technologies. With that being said, don't forget to go and annihilate that like button right now, subscribe if you are new, comment your thoughts down below, and don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. With all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.